Spy Trader Podcast Script. Hello, everyone. Welcome back to another exciting episode of Spy Trader. I'm your host, Bobby Bull Markets. Whether you're chilling at home, hustling at work, or riding the subway, I'm here to bring you the latest financial news and trading insights that'll keep your investment game sharp. It's Friday, August 30th, and it's 6 p.m. sharp. Let's dive into today's thrilling market updates. First up, let's get right to the juicy news that's shaking up the market. Yesterday, Nvidia took a bit of a tumble, dropping over 6% despite posting impressive earnings. Investors are jittery about its valuation and the upcoming delays in the next-gen AI chip, Blackwell. But hold your horses. Analyst Beth Kindig of IO Fund is still betting big on Nvidia. She believes it could reach a whopping $10 trillion valuation due to the massive growth potential of the Blackwell chip. CEO Jensen Huang is super optimistic about Blackwell driving significant revenue despite the setbacks. Meanwhile, on the financial front, Warren Buffett's Berkshire Hathaway has been shaking up their portfolio. They're scaling back their stake in Bank of America, now down to 11.4%. In just a few days, they sold 1 million shares, bagging $848 million. The cumulative sales since mid-July have hit a massive $6.2 billion. Looks like Uncle Warren's got some mixed feelings about BAFA. Lastly, keep an ear to the ground for the upcoming Federal Reserve rate cuts. Citi economist Robert Sockin predicts up to 125 basis points in cuts by year-end, driven by a weak job market. That's a lot steeper than what investors are currently bracing for. Now, what's all this mean for us? Let's break it down. Nvidia's stock is a roller coaster right now. Despite the recent dip, Kindig's bullish forecast suggests Nvidia might still be Elon Musk and Mars level out of this world in the long run. Market reactions to tech stocks like Nvidia can spill over and create waves in the S&P 500, so brace yourselves for some short-term volatility, but keep an eye on the horizon. If you're into long-term plays, buying the dip could be a smart move. As for Bank of America, Berkshire's partial exit could be seen as either a strategic profit-taking move or a lack of confidence in the bank's future. For S&P 500 investors, it might be time to reevaluate your financial holdings. If Buffett's shifting, there might be reasons to be cautious. Now, to those anticipated Fed rate cuts, lower borrowing costs are great for value stocks and small caps. This could lead to a broader market rally away from just the heavyweights like Nvidia and Apple. Keep an eye on sectors that traditionally benefit from rate cuts, like utilities and consumer discretionary. All right, folks, the trading recommendation today is a two-part approach. 1. Buy the dip in Nvidia. If you're a long-term investor with a penchant for tech, consider scooping up Nvidia during this price weakness. The AI revolution isn't going anywhere, and neither is Nvidia. Just be ready for some turbulence. 2. Diversify into value stocks. With potential rate cuts on the horizon, diversify into some solid value and small-cap stocks. Look at sectors like utilities, consumer discretionary, and even financials. Yes, despite Berkshire's BAFA sale. Companies like General Electric and Targa Resources could be solid bets as they've shown strong recent performance. Finally, before we wrap up, let's keep it light. What's a tax auditor's favorite animal? The tax-eater turtle. All right, maybe I should stick to trading advice instead of jokes. That's all for today's episode of Spy Trader. Keep those portfolios diversified, your alerts set, and your spirits high. Remember, the market's like a box of chocolates. You never know what you're going to get. Catch you in a few hours for another round of financial insights. I'm Bobby Bull Markets, signing off. Stay bullish.